Let us now see about the general deductions under section 37 subsection 1. Any expenditure other than the expenditure which are specifically mentioned in section 30 to 36 shall be allowed as a deduction if the following conditions are satisfied. Now we saw in some of the previous slides, or actually in most of them, that section 32 to 36 is what we studied there. Under various parts of these sections, there are certain specific expenditures which are allowed as a deduction. But what happens is that, being a fluctuating thing, there are different kind of expenses in different kinds of businesses, right? So let's say if you're an e-commerce firm, you have the website expenses, right? You have advertisement expenses and so many other of them, right? Now there is not a commercial feasibility, or it's not technically possible to cover each and every type of expenditure within various sections, and therefore the need comes in that there has to be a general section, right, which allows all other expenditure which are incurred for the purpose of business. And this section is section 37(1), which says that any expenditure other than expenditure which are specifically mentioned in section 30 to 36, which means what? If an expense is specifically covered under the section, which is 30 to 36, then you cannot claim a deduction under section 37 subsection 1, right? Now, if it is not covered there, then it is allowed as a deduction provided the following conditions are satisfied. Let's read each one of them separately. The first one, it should be incurred during the previous year. So an expense which pertains to the previous year itself is allowed as a deduction. If it pertains to earlier years, right? Let's say it's a past period expense, okay, or to future years where it is a prepaid expense. In those cases, it will not be allowed as a deduction under section 37 subsection 1. The second condition is it should be incurred wholly and exclusively for business purposes. So if it is a personal expense, then also it is not allowed for 37(1), right? If there's an expense which pertains partly to business and partly for personal uses, there's a separate section for that which we will see after we discuss 37(1). But generally the condition is to claim a deduction under this section, the expense should be incurred wholly. Wholly means completely and exclusively for business purpose. The third one says it should not be in the nature of capital expenditure, which means what? Only revenue expenses are allowed as a deduction under section 37 subsection 1. It is not in the nature of personal expenses of the assessee. Again, this point and this point to an extent are corollary, right? And the last one, it should not have been incurred for any purposes which is an offense or is prohibited under any law, right? So let's say you want to get something illegally from someone else's house and you hire someone who goes, steals that thing and comes back, right? So that thing is an offense. Stealing is an offense, right? So if a business incurs any kind of expenditure like that, it is not permitted, right? Some of the examples which are there are like this: penalty for infraction of law, for violating law, whether under sales tax, excise tax, are not allowable as a deduction, right? This is self-explanatory. So if you violate any law and you are levied any penalty, that is not going to be allowed as a deduction. Penalty for breach of contract, etc., which in the nature of compensation are allowable. Let's look at this. So let's say two gentlemen, A and B. A sold goods to B, and B said, I will make a payment to you within 30 days, right? But B is unable to make the payment to A. As a result, A is not able to meet his own commitments, right? So A files a case against B for breach of contract for not making the payment within 30 days, and therefore B pays 100 rupees, 100 to A. This 100 is for the breach of contract and is meant to compensate A for other losses that he has incurred because B violated his part of the contract. So these kinds of penalty, which are not for violation of law but for breach of contract and are meant to compensate the other party, are allowable as a deduction. So B will be able to claim a deduction for payment made for the breach of contract. Third, interest under the Income Tax Act or Wealth Tax Act are not allowable as a deduction. Isn't it very fair? When income tax and wealth tax that you pay are themselves not allowable as a deduction, why should any interest that you pay under those acts should be allowed as a deduction? Therefore, any interest that you pay under the Income Tax Act or the Wealth Tax Act are not allowed as a deduction. The last one, interest on loan taken to pay income tax is not allowable as a deduction. Again, self-explanatory, so we'll not get into too much of detail on this as well. Right? Let's move on to the next slide.